what's just as painful, if not more painful, than losing money in crypto? That's what we're going to be talking about. I'm Joanna Garzilli. This is Crypto Angel Network. Thank you for subscribing to the channel, for lighting up the bell so you get my notifications, for sharing, for liking, and especially your comments. What we are going to be talking about today is some resources, some things that I wish that I had known about when I was doing a lot of trading in 2021. There are certain things I know. You've seen me talk about this topic before, and that is crypto taxes. But now that I work for Directed IRA, I am learning a wealth of information, and I just want to share a couple of things with you so that you can see if this is something that is going to be helpful for you. If you're a crypto trader, investing, you're just dipping a toe in crypto, and this is only going to be applicable to US citizens. So with that being said, let me go ahead. I'm going to share my screen. And the first thing that, I was just saying that, one has losses, the market dips, things are painful, but what could be worse? And this is it. So this is an article by Matt Sorensen, who is the CEO and founder of Directed IRA, and he wrote this for Cryptopedia. And I'm just going to share this little section with you here and to give you some food for thought. And then I'm going to move on to a couple of other important resources for you. I know this isn't the glamorous stuff. This isn't us just talking about, some of the great, some of my favorite meme tokens out there. Go Kishu, go Dogs of Elon. But let's talk about what Matt says here. The difference in taxation between personal crypto gains and crypto Roth IRA gains is significant. Say you bought 10,000 US dollars worth of Bitcoin on January the 1st, 2017, and you sold that Bitcoin on August the 26th, 2021 for $470,988. I love it. Matt is very specific because he's also a lawyer and a CPA. How much of that profit do you get to keep on your $460,988 gain? If you bought and sold the Bitcoin personally, you'd only get to keep $345,741 of the gain, as you would be paying taxes, wait for it, of $115,247 if you bought and sold Bitcoin in a Roth Bitcoin IRA. You'd get to keep the entire $460,988 gain. So, one can say, well, it's a gain I wouldn't have had, at least it's profit, it isn't loss. But if you did do that in an IRA, you would have got to have kept that $115,247 tax. So he says here that $115,247 tax assumes a federal long-term capital gains rate of 20%, and a state tax rate of 5%, right? So you've got your federal and your state for a total tax rate of 25%. There are no taxes owed when you sell crypto in an IRA, and the gains are designed to come out entirely tax-free at retirement with a Roth IRA. Now, this was something that it took me a while to get my head around this. I mean, literally, when I started learning about all this stuff, and I'd heard about IRAs before, but it took me almost 3 months. And I like to think I'm not, obviously I'm not a genius, but I like to think I'm relatively intelligent. I'm quite smart. I know a lot of you here in the Crypto Angel Network community are much smarter than me, but still, with that being said, I normally learn things pretty fast. This took me a while to get my head around this. I think because this idea that I could trade, could buy, could sell, and invest, and that I would not have to pay that tax. I think that was the mental block for me. And there are different ways that one can do this, where if you are already in a traditional IRA and then you want to trade crypto in that traditional IRA, you're going to defer the tax. So the gains that you have, you're just not going to, that can accumulate, those crypto gains can accumulate. And then if you decide, when you decide to withdraw those gains, then you're going to pay tax, but the tax is deferred. But in a crypto Roth IRA, so long as you do not take out the crypto before 59 and a half years old, or if you have had the account, like you're over 59 and a half and you've had the account for 5 years, you are going to pay 0 capital gains tax, 0. So with that being said, I would love to know, what are your thoughts? What have you been doing? How much trading do you do? Like, let's have a conversation around this. I want to share a couple of other things about why we do not want to stick our heads in the sand with cryptocurrency. And one of these things here is a warning from the SEC's Gary Gensler. He wants greater scrutiny for crypto exchanges. Mark Kohler, one of our co-founders and who has his own CPA firm, in addition to be co-founder of Directed IRA, said, just let us know that the IRS is watching. Like, they are about to come down hard. You know, they are waiting to get these regulations in place. And there's a couple of other things. Just bear with me and stick with me on this so that you can protect your gains, so that you can be proactive in being able to maintain more of your wealth, or also understanding about tax, if you were to have a loss, for tax harvesting as well, because there's different ways that you can put funds in your crypto funds depending on what you earned in a particular year. That's going on a deeper level. I'm not going to do that because that is not my expertise. That is something that you could connect with Directed IRA about. So Gensler says, I've asked staff to look at every way to get these platforms inside the investor protection remit, he said. And so here we go. Gensler airs his concerns about the dangers to consumers if crypto exchanges are not properly regulated. You know, well, you don't know, so I'm going to tell you. I think that exchanges that we can trust, again, not investment advice and just my personal opinion here. Gemini, full-on custodian, fully regulated out of New York. You can trade in every single state. Coinbase Pro, that I use a lot as well, fully regulated, cooperating with the SEC. Other exchanges, I'm not going to name certain other exchanges, but because I don't want to, I don't want to be negative. But if it is not based, not registered within the US, if it is an exchange that allows massively leveraged trades, right, where you can do 20x, 50x, 100x, that you should take that. I recommend you take that as a red flag. Because a number of those types of exchanges that have that type of trading available, or that are in more obscure offshore locations, or keep changing those locations, they are not cooperating with the SEC. And those exchanges are either, you can suddenly, with very little time or without warning, those exchanges could suddenly be forced to, that they would not be able to, US citizens would not be able to trade on them. And suddenly you could decide to go to your account and find out you're locked out and you're not going to be able to get hold of those assets that you have on those exchanges. So this is why you need to be really careful and know the risk reward. I can just tell you that I do all my DeFi, my mainstream tokens, I do on Coinbase, mostly on Coinbase Pro, and also on Gemini Active Trader. And then for the tokens, some of the meme tokens that I like that are on decentralized exchanges that I think are great projects, but they're not yet available on Coinbase or on Gemini, that I know there's more of a risk there with that. But the token, I'm prepared to take that risk because I really, really like the projects. So he says here, Gensler says, if the trading platforms don't come into regulated space, it would be another year of public being vulnerable. And I mean, yes, that is true, but there's like a fine line between where you are stopping innovation within Web3, DeFi, the NFT virtual art space. And so I am curious to see, I wonder, what do you think? What do you think Gensler is going to do here? He said he wants to see the crypto exchanges registered with the SEC for the purposes of investor protection. And I think that is fair. There has been a lot of rug pulling. There was what the Squid Games rug pulling. There was I love doing my impression of Fizco, Super Kids, oh, I didn't do it. But it was a rug pull. And there's multiple projects out there. Typically, they're these they're more like where you can just go into a liquidity pool or some type of meme coin of a meme coin of a meme coin. So that brings me to the other thing that I wanted to share with you here is the SEC Advisory Committee. So this is on Cointelegraph. Professor J.W. Verrett, who's a CPA as well, said, I filed a reg petition with the SEC to open a call for public comment re digital asset regulation. There are nuances that SEC ignores in their speeches and Howie threats. Let's crowdsource this and start a Genesis block for 21st century regulations. Well, we'll see what happens with that. And because there are a lot of different factors at play here, and hopefully things do not get too politicized. And then we've got the whole intersection of the CME, right, the Chicago Mercantile Exchange. We've also got for the Federal Reserve, the European Central Bank, the Wall Street, all these different factors that come into play. In the article here, it says, since the 1940s, the SEC has used the Howie Test to determine whether certain assets qualify as investment contracts and considered securities, right? This goes back to Gensler's point before. Many experts consider the SEC's 2017 Dow report, in which it said that digital assets could indeed qualify as one of the most significant regulatory moments for cryptocurrencies in the United States. Citing his experience as a law professor, Verrett implies that the SEC's application of the Howie Test on digital assets was inconsistent from the language used in the Supreme Court decision, potentially leading to cases that could result in the highest court overturning the 1946 case. So this is like what we have at play here. Where is the line going to be drawn? Because we've got thousands and thousands of tokens out there. I think the last time I checked, we were at around 8,500 tokens. You got all these different DAOs. There's been a lot of conversation out there about Federal Reserve just printing out money. Well, we also have US dollar Tether, a stable coin that is meant to be pegged, but now admits that it isn't pegged. And it looks like it is coming under more scrutiny. I've done a number of videos on that. But it's used for a lot of trading pairs. I mean, they're now, what was it? Last time I looked, it was around 72 billion. And but now we've got US dollar coin, right? Circle, that they are starting to gain more traction as a stable coin. So there's all these different factors that are happening. Then we've still got the XRP Ripple investigation with the SEC. Where what was it, back in 2017, I remember first buying XRP, and it was number 3 in terms of its market share, and now that has been suppressed considerably because of that ongoing case. So I think it's just a fine line that in terms of how is this all going to get regulated, and this is something that is important, I think is valuable to watch. Now, let me just, I wanted to just hop over, let's just hop over here to what we have coming up this Saturday. I hope you get to see this, you're watching this video before Saturday, January the 29th, where I will be emceeing virtually. I'm going to be in the live chat for the first annual Crypto Tax Summit that is going to be hosted by Mark J. Kohler and by Matt Sorensen, who are co-founders of Directed IRA. And this is going to be incredible. I've seen different things. I've got certification from from Ivan on Tech, now Morales on digital asset taxation. I would say this is by far the most advanced, forward-thinking, and proactive summit. There's nothing else that is like this out there yet in terms of understanding, protecting your crypto gains, and being careful, and a number of different strategies that you can use for saving yourself from taxes, either going to zero taxes by, especially if you're doing any type of crypto mining, if you're doing any type of DeFi staking rewards, if you are minting any NFTs, this is all going to be addressed. And we have this happening live in Phoenix. Like I said, Saturday, January the 29th, all day, and I will be there in person. And there also is going to be virtually at the same time as well. So we have 200 people who are coming live. Originally, this was going to be a smaller event, and then we just went and hired another larger space. And then we have online, we already have over 600 people registered. And so we're going to be doing, covering, Matt and Mark are going to be covering cutting edge strategies on how to save taxes in the crypto industry, how are NFTs, staking, DeFi, mining, and no validation taxed, which is going to be an incredible resource, because there's a couple of things, especially if any of you out there, I know some of you in the community are, if you are validators, right? For example, like on Harmony, or if you are looking to go and do a mining rig, like for Helium or for Filecoin, you then could be subject to UBIT, unrelated business taxable income, or rather unrelated business income tax. You could be creating a tax event for yourself. So you really want to make sure that you have things structured in the right way. And they are going to be, actually Mark has his own mining rig that he does. So he actually does crypto mining himself and understands tax inside out. We're also going to have leading CPAs and tax lawyers break down basic to advanced strategies. So whether you're just starting out and doing crypto trading, or you're looking to start to maybe do something more advanced, an LLC structure, and have more freedom to really do whatever you want within crypto, you are then going to protect yourself from having a shock with the IRS. Also doing business in the metaverse and what to expect from the IRS with that, because that is a very fast changing space. And as we know with the NFTs, there are billions and billions of dollars worth of transactions that have been done in this past year. You know, the IRS, if there's somewhere they can collect some tax, oh, believe me, they're going to be looking, you know, it's meant to be totally right. You're meant to be protected and anonymous on the blockchain. But as we know from some of the hacks that have happened in the past year, the exchanges are having to cooperate with the SEC and with the Attorney General. And so this means that, you know, if they want to go and trace something or have access to that, they will somehow likely get the permission for that, unless you're doing something, you know, more out there within a decentralized exchange. But I just wonder at some point if, you know, some of these decentralized exchanges as well are on Amazon Web servers as well, right? They're not totally decentralized. I think isn't Uniswap around 20% or so on the Amazon Web servers. So this is like you know, there is a lot to this when we look beneath the surface that is really valuable to educate yourself on. And then if you are some sort of professional within the space, you are a CPA, a tax planner, a financial advisor, an attorney that wants to gain more understanding, you will be able to earn the crypto tax certification that will be taught in the final hour of the Crypto Tax Summit. That will be a very, very valuable resource. And then every attendee gets a limited edition NFT. So you can see all of that here. It's going to be at the Point Hilton Tapatio Cliffs Resort in Phoenix. I would love to see you here in person. And then you can just see here the agenda for Saturday. Another thing that they're going to be doing that's really cool as well is we're going to have the founder of Ren talking about charitable remainder trusts. So being able to save millions on long-term gains and doing that with your crypto. So you're doing something really positive there, while maintaining gains as well. And so you can see the schedule here, talking about Roth and 401ks and crypto. So let's say let's say that you finished with an employer and you have a traditional IRA, or you had traditional IRA or some type of even a solo 401k, and you wanted to trade that in crypto, you can then do a Roth conversion, and then you could do a traditional IRA crypto with directed IRA, or you could do a conversion and go crypto Roth IRA. So you'd be able to do that with where we set you up with Gemini Active Trader, or you can do it where you could have that LLC structure, and then sky is not the limit. Then you can go to the moon in terms of what you want to do with that. And so this is where you would be able to register for the event. We've got obviously, besides Mark Kohler and Matt Sorensen who are speaking, we also have Stephanie as well, and who is speaking, and Darren from KKOS Lawyers, and then Kristen Mirabella, who's Director of Business Development at Gemini. And the last thing I'm going to show you here, which is a really, really cool resource, is at directedira.com cryptocurrency. This is where you can see this process of where you can go and open an IRA. You can just go and fund an account. If you are under 50, you can do a maximum of $6,000 contribution in a year. And then with that, we open that account for you. Then you end up having your Gemini Active Trader account, where it'll be directed trust company for the benefit of, and then your name, and you can trade away in that, trade away as much as you like, and you are not going, there will be no taxable event that is created from that. There's over 60 plus tokens in Gemini. I have both. I have a crypto IRA, and so I have my tokens. I hold Terra Luna in that, and then I also have a regular Gemini account as well, where I have Terra Luna in that as well, and then I have that in Gemini Earn. You can, for example, in your crypto IRA, you could do the staking, right, where you do earn, but then what you have to do is you have to do what's called a direction of investment. So you have your crypto IRA account, but let's say if you wanted to go into the earn, us as your passive custodian, you would just have to do that direction of investment form here, like all the different forms that are here. And then you would be able to do that earn. So this is a really quick process to set up. And then you can see here the fee schedule for that. I just skipped over this. This is a great webinar that gives an overview by our COO, Aaron Haldeman, on investing your IRA in Bitcoin and other crypto. And then here we've got another episode with Matt and Mark on how to invest in Bitcoin and other crypto with a self-directed IRA or 401k. And our fee schedule here, you pay an annual fee of $295. And then the directed IRA trading fee is 1% trade fee, right? Trade fee per trade. And then Gemini trade fee is between 0.25% and 0.35%. And again, we are your passive custodian. We are not a third-party administrator where, say, maybe you're going to go and sign up and do an account to do crypto, but there's no accountability, there's no insurance, there's no protection there. Any funds that you have that you are trading within the crypto IRA, you're insured up to $250,000 under the FDIC. And also directed IRA is regulated by the Arizona Banking Association as well. So you can just take a look here, and if ever you have any more, any other sort of questions or things about this, you can reach out to me. You can message me here, or you can email me as well. You can send an email to joanna.garzilli@directedira.com. So you can see here all the different types of accounts: crypto Roth, crypto IRA, crypto health saving. I mean, like there's every crypto solo 401k. And then this is where we get into if you're wanting to do a conversion, right, for the backdoor Roth from a traditional, or if you had generated more income, you wouldn't be able to just do the Roth. You would have to go traditional and then set that conversion in motion. And you can even do a crypto Roth IRA for your kids. I think this is all pretty cool, pretty awesome. I'd wanted to share more about this sooner. Before I did that, I really wanted to get my head around it all and go through the experience of what it was like to set up and have my own crypto IRA, because I never like to share anything that I am not doing personally myself here, because this is my Crypto Angel Network is about sharing my own crypto journey and the evolution of my crypto journey from when I started just trading, going, oh, I don't know what these red and green candles are, to now being a crypto business development officer at Directed IRA, and then learning even more about IRAs from Matt and from Matt Sorensen, and really starting to understand this whole process and this wealth of information. That was something that I set the intention a couple of years ago. I said to myself, I really want financial education. What is the next step in my spiritual growth? It is financial literacy. And lo and behold, I feel that Spirit ended up landing me because of a series of synchronicities from taking a trip to Bluff, Utah, with Aaron Haldeman, and then I ended up, things aligned and I've ended up there, and I just absolutely love it. And I feel that being at Directed IRA, it helps keep me practical and grounded as I trade some sort of wilder tokens. It sort of just like helps create some temperance for me and balance things out so that I can feel cool, calm, and collected, especially when the markets are doing crazy things. So you let me know in the comments. Do you already know about IRAs? Are you looking to self-direct in an IRA? What are all your thoughts on the crypto regulations that are incoming? It's not if, it's just when. Thanks for sticking with me with this. I know this is not an easy, maybe fun topic, but it is a very, very valuable and necessary one. I'm Joanna Garzilli. Thank you for connecting here on Crypto Angel Network and for being part of the community. If you are not already subscribed, please do go ahead and do so. And I will look forward to seeing you in the next video.